Guys, welcome once again to another episode of our training videos. Osifu here, CEO Forest Sports. This is Osifu. So in today we're going to be talking about a tool called Fibonacci retracement. Fibonacci retracement. Okay. So now, what do we use this tool for? We use it to measure a pullback. Remember, I told you guys that price moves like this. The price is moving, price creates a low in an uptrend, then creates a high in an uptrend. So this is the low, and this is the high. So price will definitely pull back and create another low, which is higher than this previous low, thereby making here a higher low. And then price continues again, create a high which is higher than this previous high, thereby making here what a higher high, right? So price moves in this series like this, they create another low here, then another higher high. Okay. So now what does Fibonacci help you do? Fibonacci helps you to calculate the this pullback here. All right. It helps you to know how far this market is going to pull back to. All right. So you want to find out where this guy is going to get to. If he's coming back like this, okay, is he going to get to this place? Is he going to get here? Is he going to get here? Is he going to stop here before continuing up? Right? Is he going to stop here, or is he going to be here, or is he going to be here? This is what Fibonacci helps you to catch, so that you will know where to enter the market and where to join the buy. Remember, in an uptrend, you are buying, okay? So, and you want to buy at all of these points here. You want to buy at this point here, all of these points. This is where you want to be buying from, okay? You want to be buying at where the market pulled back to, so that you cannot continue in the upward movement. In such uptrend movement, you don't want to be selling, because the sells here, the downward movement are usually small, while the upward movement are bigger. So you want to only be buying here. So you want to be buying only, okay? So buying from all of these pullbacks. So today Fibonacci is going to help us to find out, okay, where is this place now that we are going to be buying from. Fibonacci is on your trading view application. It's here. Look at it at this edge here. After the first cross, the second one. So the third one is where you will see Fibonacci retracement. If it's not showing here like this, the small arrow beside it, as always, you can open it, and then you see a lot of two. So we're focusing on the first one, which is Fib retracement. This Fib is Fibonacci retracement. Okay. So when you tap on it and place it on your chart, and just when you place it like this on your chart, just widen it out and push it up or down. All right, mine is already set, your own is not set. So let me give you my settings, so that you'll be able to set your own. Let me take it to default. Let me see if I can take it to default setting. um Apply default. Okay, so on your chart it will look something like this. It will look something like this on your chart. Okay, but I'm going to give you my settings so that you know how to set your own to look exactly like my own. So what you want to do, once you place it like this, let me delete this first of all. Let me take it slow. So once you take it from here, boom, drop it anywhere here, and just extend and push up or push down. Either you push up like this or you push down. Just extend and push up or push down. Okay, it's going to appear like this. Then click it again and drop it. So once you click it again, you see these icons at the top here that comes up. So you want to go to settings. Okay, so when you click on settings, right, so the first thing we're looking at is the style, this style here. So for this style, the first thing you want to uncheck, this trend line, we don't need it. Uncheck trend line. Just follow me as I do mine. Uncheck trend line, we don't need it. Okay, so we'll leave zero. We don't need 0.382. Uncheck that. We'll need 0.61. You leave that. You leave 1. Uncheck 2.618. Uncheck 4.236. Uncheck 0.236. So we'll leave 0.5. Uncheck 0.786. Uncheck 1.618. Uncheck 3.618. So when you are done unchecking all of these, then you can now choose any of your preferred colors. Okay. So for me, I want to change my 0.5 to red. I want to change my 0.5 to red. Okay. So going down, you see this background here, background, uncheck background. We don't need background. We don't need background. Okay. So these are the only thing we are doing. This is the settings. So these coordinates and visibility, leave it as it is. We're only changing things on style. So this is the way I change mine. You can do yours. You can change your 50 line to this one, blah blah blah. Then also one more thing. So our levels, we want it to appear in percentages, in percent, not value. Click on percent, okay? Percent. So our text, what our text to be at the right. No, let me see, at the left. No, not this one. Label. Let's take this one to middle. So leave here as middle. I know why it's not sure. Why is it not sure? Network. Let's leave it at right. I want it to appear at the right. Let's click OK. Let me see something. No, this is not what I want. Let me go back to settings again. Let me go back to say I don't want you to appear. I want you to appear this side here, here around here. So right. Okay, cool. Cool. So is this label we're changing? Label. So label should be at the right. Yeah. Okay, then click on OK. Boom. We're all set. So it's now looking like my own. Like my own. So what this tool is a mathematical tool that helps you calculate the 50% level and 61.8% level. So it can be calculate 78 point something percent. All of those things we will check at different percentages, but we're not focusing on those percentages now. We're focusing on only this 0%, 50%, 61.8%, and then 100%. These are the two we're focusing on. Okay. So now how do you use it? How do you use it? Now, in an uptrend market like this, the market is going up, in a bullish market, going up like this, going up, right? Now you've seen a higher low, and are currently seeing a high, okay? And then market is started to like let me use this. So market is starting to like come down. Market has started looking like it's coming down like this, right? But now since this guy is coming down, you don't know where it's going to get to, right? You don't know if it's going to stop at this point here. If it's going to get to this point and then push up, or if it's going to get to this point and come down here to here and then push up like this. Okay. Now you don't know. You don't know. All right. So what do you now do? Let me move all of this. What's wrong with this guy? Hmm. Okay. So what do you now do? You now take a Fibonacci level and place it at this low, the first low here, and oh, this is my feeling my Fibonacci. Sorry, Fibonacci is here at the top. Yeah, click it here. You come here, place it at this low, right? Drag it up to the current high. Once you drag it up to the current high, you place it there. All right. Now, what we are focusing on is just this place here. Let me remove this guy. Remove this guy. Here. So we are focusing on this opening in between the 50 and 61.8. This is what we are focusing on in between here. This is where we are hoping that price is going to come back to this place and react from here and push up. Now, once you join Fibonacci level at this place, you're now able to know the potential place where market is going to get to before going up. Now, you carry this your rectangular tool and then mark it out like this. Mark it out like this. Okay? And now say, okay, whenever price is going to come back to this place here, I'm going to be waiting for price. When price come down to this place, I will now join the buy from here and place my buy from here and ride the market all the way up. You can ride it to this first 0% to collect your profit. All right, this place will take your profit here, or you can ride it above like this. All right, so I hope it's clear. So this the Fibonacci. This is how we use Fibonacci to know where the retracement is going to come into. Okay, now let me do for a sell example. For a sell example, so market is coming down, created a lower high and a lower low, and then this guy started coming back like this. But now you don't know where it's going to get to. The same thing, you carry Fibonacci 2 like this. Now you are drawing this one from the top. Remember the buy, we drew it from the down to the top. For the buy, we drew it from the down to the top. But for sell, we're taking it from the top to down. From top to down. For buy is down to top. For sell is top to down. You can write it in your book. So once you match that like this on your chart, you now know, okay, that this in between here is where price is going to most likely come into and react from for me to catch my sell. For me to catch my sell, okay? Then you write this all the way to this place here, boom, and then you enter for a sell, and then you follow the guide down here, you take profit, or you extend further for more take profit. Okay, so that is that for Fibonacci retracement. So let's go to the chart to see if we can get a good let's look for an example on the chart so that it will be clearer for you. Because you can also practice this so that you get better at it. Okay, you get better at it. Okay, so okay, this is good. So looking at this guy, we can see that this guy is currently moving up. Right? Let's mark it out and see. This guy is currently going up like this. Is an uptrend. You can mark it like this, or use this one here. Right? Is an uptrend. Now, if eventually you came to the market and the market was in between here to here, you can mark it out like this. Mark from here to this area here. Right? Mark from here to this area. Let me let me go to my other trading view so that I can do a replay too for you guys. Let's go there so I can do a replay too. Okay. So this is EURUSD. No, we're looking for GPUSD. Our example we're looking at just now. GPUSD, GPUSD. Okay, chart, daily chart. Okay, now for the example I was giving, okay, so we can see that this guy is currently moving in an uptrend, like so, from here to here to here to here to here to here. All right. So for instance, you woke up to the market and then you saw, here's my replay too. For instance, you came to the market, right, and then you've seen that this guy is going up, right, from here you can see that this guy is already going up from this point here, right, from here to here to here to here to here to here. Now you've already seen what's wrong with you. You've already seen higher highs and higher lows. Now you came to the market and then you see this low here, and currently it created a high here. But now you don't know where it's going to get up to, right? You don't know where it's going to get up to. This is an uptrend already. So what are you going to do? You've seen that this guy has started retracing all the way back here. He started retracing all the way back. You carry your Fibonacci tool like this and place it at the bottom here, and take it to the top here. Okay, this one does now have 61.8. Let me open 61.8 here. 0.618. Okay. All right. So now, since you've seen this, you now know, okay, this is the place that price is going to get to before it will continue buying again. You mark it out like this. Stay with me, guys. I really hope you guys are learning and it's not being complicated to you. Okay. So once you mark at this level, you can remove your Fibonacci now and then now wait for price to come and do its thing. Okay. So price has come into that level. All right. Price has come into this level, and then we see a confirmation here, which I'm going to teach you guys later again, which is candlestick rejection patterns, candlestick patterns, and tag patterns. Okay, to give us rejection, to know when price actually rejecting off a particular zone, right? A support and resistance zone, or the Fibonacci level that we mark. So you can clearly see that around that area is where price reacted from and started buying. Okay, so if you are taking a buy from here, if you are taking a buy from here, it will be something like this. So let me pause it. You're taking a buy from here, so your stop loss will be below this low here. All right, you will take the buy from there. Your stop loss will be below this low. Your tip of it will not be. You target this first high here. So if you target this, your tip of it has already what it. This is already a 1 to 2 risk to reward ratio. Okay, so we'll learn all of that later. Risk to reward, risk to reward. So you can clearly see that um this guy works, right? It works. It works. Okay, it worked. Okay, so this is how you use Fibonacci. So that's for a buy example. I don't want the video to be too long, so I'm going to try and see if I can spot a sell example before we cut this video and then move on to the next. Okay, so this is a downtrend here. This is a downtrend here. You can see this. Boom, boom. Right, let's use here. Boom, 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 then boom, 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 boom. So that's okay. So what's your Fibonacci here? You can take it from this first high here to this high here to this low. Alright, to this low here. So you can see that price also reacted in between this what 50 level and 61.8. So the reason where price now came and sold up from. You can see the reaction here. Price sold up from here. Alright, so you can do this multiple times to catch movement like this. So from here again, you can plot another level from here to here to know your price is going to react from again. Okay, let me delete this first guy. Let's say you missed the first one, you want to catch the second one. From here to this next level, you can see that price still came a little bit above the area, but if you understand candlestick formation, you can still catch this move. You see that price came a little bit above the area here and reacted around this area and sold off. Okay, price sold off. So this is how you use Fibonacci retracement level, just to know where price is going to pull back to, and then you cannot enter for a continuation to the downtrend or a continuation to the uptrend. So with that, we'll come to the end of the video today. I hope you guys got value from this knowledge that has been shared, from this information that was shared. I hope you got value, and then I'll see you guys in the next video. Once again, my name is Osifo, and this is Forex Pause. Bye bye, guys.